Hello everyone, Joshua Hayes at BigWaveTrading.com. I'm going to make a little bit of a different weekend video lesson. Might be a little long. Hopefully we're going to learn something from this video lesson. If not, I'm hoping there's a few gems in there. And if you don't learn anything, and if there are no gems for anyone, I do have a new long idea at the end of the video lesson, but let's get into it. First things first. Something kind of actually very interesting happened this week in the chat room. It's very odd because I didn't even see it. And if it wouldn't have been for these two brilliant members of my community who I adore greatly, I do not say it enough. I apologize, but it's all business with me during market hours and even after the market hours because I got end of day stuff to do. I got intraday stuff to do. I love to do this, trying to perfect the trading. I'm going to remind everybody, all of my day trading accounts are at all-time highs, and that remains my time frame of focus. But my bread and butter throughout my career has been position trading and swing trading. But the way that you swing trade and position trade in an uptrending market versus a choppy market like now versus a downtrend where you don't even get signals, which is great for me, is completely different. The biggest issue with this market right now is that I'm getting signals that I can't quite tell. I can't find rhyme or reasons behind them. I know leading stocks, leading groups, great fundamentals. I always focus on those stocks. I always focus with the best looking chart patterns with the correct volume profile to price. But it's been a very weird market because every time I think that I'm safe and I can loosen up stops, the market reverses. And every time that I think that I should keep my stops tight, I get shaken out and then the stocks run higher. Now, for a new trader that isn't experienced, who doesn't have the time and or who has not studied history, this might bother someone. For someone like me who understands market cycles, right now, it makes complete sense with me. And one of the most interesting things this week, I had a member point out the inverse head and shoulder on the SPY. And I at first was like, oh, I didn't see that. I told him I did not see that. There is an inverse head and shoulder. That's quite bullish for the SPY. That looks good. And then on Friday, I had another member who I adore and love. He's actually my moderator, Brahma Bear, point out the head and shoulders on the SPY. And I was like, oh, I didn't see that because I can't remember the last time I've seen a head and shoulder pattern while an inverse head and shoulder pattern has developed. Now, I'm sure I have, but I will be honest with everybody. In my 20 years of doing this, I don't think I've ever drawn this chart pattern. So if you want to see the dichotomy and the battle between the bulls and the bears right now, I just don't think that this can sum it up any better. And as you guys have known, for anybody that's watching these weekend video lessons, I've been in the chop camp since forever. This last leg of this uptrend right here was confusing. After Jackson Hole, everything made sense again. This uptrend seemed to make a little bit of sense to me due to that bar right there. But that being said, I'm still missing grade A setups of both can slim nature and for what I like to see. My signals are still at best grade B, and there still continues to be no rhyme and reason. The only thing that this market has going for it for me is that I continue to get shaken out. However, when you're as experienced as I am, and when you've been around as long as I am, you can modulate your size, the way that you also handle your long positions, and the way that you use your stops or cut your losses, depending on the market environment. And I happen to post this in my chat room, reminding everybody following, because there's 3 new long positions for Monday, and I wanted to remind everybody, this is how you can kind of gauge how you can size up. I look at all these variables. I ask myself, there's no particular order. Is this a bull market? I look at the SPY and I ask myself, actually, let's look at a different tab below. So you see, by the way, just want to show you everybody, I have the open high, this is what I could just live off of. So this volume bar, price bar, moving average lines, I could live off of it. However, I prefer a very rich, detailed chart. So we're going to go ahead and go into that chart. But the reason why I have this, because I have my 200, 150, and 50. Now, if after this very first variable I go after, I don't have any of the others that I go after, it's fine, as long as the market looks like this. This is a market where you want to buy pullbacks and be long. I mean, this goes for right here too. How far back can I go in telechart? And you can see in 2017, everything's lined up. When everything's lined up, it's good. However, here's all the variables in my equation to tell me exactly how large I should size. I ask myself, is this a bull market? Are we trending up with the moving averages properly stacked? I'll rhetorically ask you. Let's get rid of all those drawings. Does that look the same now as back here? Okay, I don't think so. So that's one part of this equation. Then I ask myself, okay, if we're not uptrending, is this a QE market, quantitative easing market? Is the Fed cutting rates or hiking rates? Okay, they're hiking rates. That's another negative. Is the Fed buying assets on their balance sheet? They're not. Okay, so that's another negative. Then I post in the chat room trending above the 50, 150, 200, but that basically goes back to the bull market. Then I ask myself, did the VIX ever, during our downtrend, ever close above 40, indicating a panic or fearful bottom? It has not. So it's hard to say that, oh, we bottomed. We have a real bottom here. Okay, so if the VIX doesn't spike over 40, then what I need to see is I need to see passive investors, long-term retail, panic selling. Have they done that yet? I don't have the chart to show you, but I've showed you charts before, and I'm about to post an updated one in the chat room. I can definitively tell you all, no, they have not. Passive investing has come down a little bit. There has been equity outflows recently, but it's still just a trickle off the recent highs, and they were buying stocks this entire downtrend. This is the first year since 2001 that the market has had such a severe downtrend that retail was buying stocks. Does anybody remember what happened on September 11, 2001? That's normally how you end up eventually forming a bottom later on after a bull market. You have an outlier black swan catalytic event. So just keep that in mind. I'm not saying it's going to happen. I don't want nothing bad to happen. I hope we have bottom. And I'm going to show you a stock chart that says, hey, out of each direction, the odds that we go this certain direction looks more logical than the rest. Then I ask, okay, so if I don't have any of that, do I have any grade A canceling setups out there? No. I mean, I had one, maybe. I can call it the one. We'll go over that in a bit. Do I have any of my grade A signals setups that I'll show over that I need to see? I'll review one of those before we leave. No. And then I ask myself this, which is actually very important to me. On a monthly time frame, is my time segment volume on the monthly time frame green? The best times for my methodology and even my cancel methodology is when this is green. And I'm going to remind everybody, look at the 90s. For this long period of time, it was green. From 2003 to 2005, my best year ever was in 2003 when I returned over 1,000% after taxes, all green. 2009, 2012, all green. The 2017 uptrend, all green. The 2020 to the 2021, all green. When this is green, I do better, especially when both the SPY and IWM is green. But unfortunately, I only have monthly data before 2000 on the SPY. The CMF, that's not that important. CMF is the most important one for me on the daily, but on a monthly, I want to see this green. So is this green? No. So I don't have really anything stacked properly that tells me to increase size. So with all that being said, I now know I don't have a good market to deal with. So if I get any new long signals, I need to have them prove to me that they're solid before I increase size. I can increase size out the gate in an uptrending market because things will be working, continuously working. But in this market, sometimes stocks work, sometimes they don't. Sometimes they work before they shake me out, sometimes they don't shake me out. And also, one of the biggest problems is that I'm implementing break-even stops right now, and that's keeping my accounts just gradually going higher or going nowhere. I'm not losing money at all on an end-of-day basis. My day trading accounts have zero drawdowns in them because I'm implementing an irrational, illogical, and basically a not very intelligent break-even stop methodology right now due to this market condition. And when you see this inverse head and shoulders and this head and shoulders on this market, it makes sense to someone with as much experience as me. Now, for young traders that just day trade, who cares about all this? Just to trade the GNSs, which we're going to go over also before we end this video. But for those that swing trade, if you don't know your market history, if you don't understand that everything is the Fed, then why are the only two hard rules at big wave trading? Number one, always cut your losses short. Protect your capital in bear markets. So whenever you do have those uptrending bull markets where the variables that I've gone through are there, you can really, really push it. And then you can actually be long leaders when you need to be long leaders whenever they're uptrending. Notice the moving average stack. When did that moving average stack fail? Oh, any surprise that Tesla has done nothing since that moving average stack failed? Can you imagine if you were fighting that the whole way lower? Listen, if you want to add some to your long-term portfolios, if you have a 20-year time horizon, I get it. But if you don't have at least a 20-year time horizon on this, these are avoids. Once your moving average stacks get into car crash scenarios, which are train wreck scenarios, that's what I call that, and then they're trending lower, there's nothing to do until you get an actual bottom. So with all that being said, if you're super bearish on the market, I ask you one question. Why is Hyatt hitting a new all-time high? If we're going to have a horrible recession and everything is just, it's going to be ugly in this year when the recession actually hits, why is Hyatt hitting a new all-time high? I don't know. These are just questions I ask myself. Okay, with all of that out of the way, we're going to look at the only really good can slim setup that I've had during this entire uptrend where it looks great on everything. So WFRD, just to let you know, this is an extremely high quality can slim quality name. It doesn't have the highest EPS. It's only a 71, but the relative strength rating is a 99. The current group relative strength rating is 80. The composite rating, which is the most important rating for me, is 95. WFRD happened to give me a candle over candle signal. That's what I call this, candle over candle, above the rising uptrending 50-day SMA on heavier above average volume with a pocket pivot point signal and a green bop spike. So this is what it looked like on this chart to me on this day whenever I announced it as a new long position. This is what it looked like on my other telechart. This was WFRD on the day of the signal. Notice that candle over candle. Notice the pocket pivot point signal. But the most important part of this chart to me, for me, is these yellow dots. This is what we call a tight squeeze. It's a trend indicator or it's not a trend indicator. It's an indicator that combines the Bollinger Band and the Keltner channels. That's combined with the momentum indicator, and you have the TTM trend. Look at how long this green is, okay? Green, then like I said, CMF on daily is all I care about. Yellow, tight squeeze, TTM trend momentum, flattened out, green CMF. You see this chart pattern? Let's get back to the other one. So that's what I saw on this day. New long signal, the long, 43.33. In a normal market, I take this long trade, I position my size to this loss, calculating my entry minus where I want my stop to be, get that total, divide it into whatever risk unit I want to risk on the trade. In a strong market, it can be anywhere up to 5R. And normally, if I do that, I'm literally putting almost all of my money into one stock. In this tape, it'll be 1R. 1% of my account value at risk max. And I'm not risking to here. In this tape, since we're not under an uptrending market, I'm calculating my size from this entry to this low. And if I get filled, I'm only risking with that size to this low. In a strong market, I get long here, position size to here, and risk all the way to this low to give it room to work. Not in this tape, but with that being said, WFRD worked on day one, gave me an add signal on day two, gave me a really big add signal on day three, another pocket pivot point signal, the volume bop, and WFRD has basically been perfect since. Now, last week, I gave everybody this as a new swing trade idea, STRL. I told everybody, get long above 34.06, calculating my risk to this low initially. However, in a bull market, not only would I get long above here, I would calculate my risk to probably just this low and give it all the way to here to work. But in this tape, I told everybody getting long here, calculating my risk to this low, and if it fails here, you can be sure I'm getting out. This is what STRL did after day one, and this is exactly how I traded it. Remember, I'm implementing break-even stops, but if the stock does not close green immediately, I'm immediately raising my final stop to protect my capital. So STRL, this was the long signal last weekend, and on Monday, it did this. Bad, bad, bad STRL. Triggered and filled. Now, if it wouldn't have traded above 34.05, nothing to worry about. I don't get in the stock. This bar happens. The trade is canceled. Why is it canceled? We engulfed the previous price bar, heavier volume than the day before, and we lost green bop. That's it. I am no longer interested. Unfortunately, STRL traded above 34.05. It triggered and filled for me and then did this. So where does my final stop now go? And this is exactly what I did. That's the low, 32.23. So my final stop was at 32.22. The next day, bam, taken out of it. And the next day, with that close below the 50 on the above average volume, it became a 100% end of day sell signal for anyone that only traded on an end of day basis. It's the way I used to trade before 2012. There are some members that still trade that way. So I still operate that part of the back end of the web or the front end of the website with end of day sell signals. But I was completely out once it traded below 32.23. It has failed. And in this market, it would have ran that final stop anyway. And now it's reversing. And that's what this tape is doing a lot of. So that's how I manage STRL in this market. Now, remember what I said about a good market? I would get long here, calculate my risk to here, and risk all the way down to there. So if this was a hardcore uptrending market, I would be out of well over half of it, but I would still probably have 25% of my original position. So that's how I manage STRL. And that's how I recommend everyone manage it, because it didn't happen, but let's pretend, because Schwab gap down, right? Yeah. So let's pretend it would have been like this. You wouldn't have cut your losses, and you're like, I'm just going to cut my final loss below today's low a day. And now you get a gap down. And if you're waiting for a closing basis, you can get a bar like that. So that's why I'm not sticking around, because the downside is just too dangerous right now. Now that's STRL. That's one that doesn't work. Now let's look at another one, since I gave it to everyone is working. OR, I believe, was a new long during this video lesson. So I gave everyone OR. How am I managing this trade as we move forward? So this is OR, triggers and fills. Bad reversal. Bad reversal. We lost the green bop. So I immediately put half of my stops at 12.53. 12.54 minus 1 cent. Holding 12.56 the next day. 12.53 the next day. Guess what happened? They got me. They got me by 1 cent. And yes, it knocked me out of half of it immediately. But because overall, we're still holding up, I still have a position, and bam, we're higher. And now guess what? I don't do this in a normal market, but in this market I do. After that up day, I sold a little bit at the market the next day. After this up day, I sold a little bit at the market the next day. Now that we're up, I can no longer let this trade go red. Break-even stops are implemented. So far, so good. Following this up day, what do you think I did at the market the next day? I sold a little bit more at the market. And right now, I'm holding OR. And where's my final stop now on OR? After this green candle has now appeared, this green bop, my final stop on OR currently is 12.88. My entry is 12.80. So no matter what, on the final piece of this OR trade, I'm going to leave green. And then TITN. I'm already long TITN. It was a new long here. The same thing happened. Everything is all good with TITN, and now we have to work break-even stops. TITN doesn't run them, and so far so good. But as each day goes by, I add a stop below each day to trail my stop up with the final stop at break-even right here. Guess what happened? They ran all my trailing profit stops, including my break-even stop. And in this tape, served me very well as TITN has come back into the base. But look at it bounce right off the 50. All is well. Notice that there's still a white triangle because I am still tracking this stock for all members on an end-of-day basis. And in a normal bull market, this would have been my final stop. And this final stop still hasn't been ran. Do we understand the difference between operating in an uptrend versus a downtrend? I'll remind everybody, when the market was uptrending, what did TITN do? And yes, we traded it here. Do you see this? Do you see this breakout? Guess who was long TITN here? And look at that nice move higher. Do you see the difference between TITN in this market versus that market? If you don't, give me a message below. We'll talk about it. So just getting to the point about having to be okay with shakeouts, I want to show everybody AT. This is one where I took profits, break even, stop, and guess what? They got me. Look what AT is doing now. In a bull market, does it ever come close at all to where my final stop would go? If this was an uptrending market, absolutely not. But by using irrational, illogical break-even stops, I missed this whole move. Am I mad? Nope. I understand the market I'm in. Also, MEGL, right here. Saw it this day, told everybody about it in the chat room. Love this signal, but guess what? It's not a signal. Why? Volume is lower than the day before. Guess who doesn't take it long with the move above 216? The next day, am I upset? Nope, because I get it. It's the kind of market that we're in. So I'm going to remind everybody, I showed you guys WFRD. This is what a grade A signal for me would look like. Bam, look at what happens to the volume bars. Now, look at this hammer off the 200 and look what it does to the previous volume bars. This was considered a grade A- signal for me. I want you to notice how it traded after that signal. That's how they're supposed to work. Just straight up perfection. Have I had any signals similar to GRBK during this entire rally off the October lows? No. What are the closest, best signals I've received? NE is one of them. You can see what the volume truncation looks like, the max screen bop. But the close and the mere fact that this signal's coming in the middle of a trading range, not grade A. But that being said, so far so good. Do I have a big position? No. Byproduct of this market. VRSN. Look at this one. So look how it's already uptrending. Look at the volume truncation. Look at the max green bop. Look at the hammer candle. Also, though, is it coming directly off the lows or the moving average or breaking out through this pivot point? Nope. Couldn't load the boat, and it doesn't matter anyway. VRSN is still working, and everything is good. In a bull market, yes, we can take some size in VRSN and NE. In this tape, I cannot. I just cannot. And then the final thing I wanted to show everybody, GNS. Do you guys see that white triangle? I'm going to remind everybody, tell a chart, once the day passes, I cannot go back in and add a white triangle to this watch list. This number of days in list, 13% change, 730%. This cannot be manipulated, or else I would have thrown a white triangle in for MEGL and I would have told you all that I was long MEGL. I didn't do that because that didn't happen. GNS, you got a white triangle there. This was the signal. This is whenever I finally got into the signal because this is not traded above this. It does not round up during the decimalizations or does not go out past tenths. So it is what it is. GNS would be an 850% gain if this was a normal market. This is not a normal market, so I've been shaken out of GNS. And actually, this video lesson is going to run out of time. All I can tell you is I was shaken out on this day thanks to the break-even stops. In a normal market, that would never happen. Actually, no, I'm lying. It was not this day. Excuse me. It was this day. I'm sorry. I got in on this day, took half at the market the next day, put the rest of the half of the stops at break-even, and that was the low. And just to let everyone know, after this day here, when you're up 287% in one day, guess what I'm doing the next day? I'm selling half of whatever I own at the market. And guess who would have top ticked with half of the sell if he would have a position? But I don't. It is what it is. Not upset about it. But congratulations to anybody that did this trade with me. However, at the same time, intraday, when stocks go from 85 to 224 intraday, there's really no point in having overnight risk. And I'm so sorry, guys. This video is going to cut off. This is my new long position for the next day, TJX. I don't know if this signal is due to options expiration or not, but let's pretend like it's not. Right off the 50, uptrending 50, heavier above average volume. BOP has gone back above the zero line. I want to get long at 79.55. And where's my cut loss level? 78.50. I'm calculating my sizes there. It's super tight. You can go down to here, and it's still good to go. But this video lesson is about to cut off. I hope you all learned anything. I would love any feedback whatsoever. I hope you enjoyed this video lesson.